My name is Steven Reiter. I am responsible for the options business at AvaTrade and also at Sentry Derivatives. Sentry is the developer of the trading platform that we're going to be using today. But we have guests today in our webinar who joined us from AutoChartist, from Sentry Derivatives, and from AvaTrade. But the AvaTrade and Sentry platforms are the same. My background is all in options, and I decided to build this platform to give retail traders an excellent tool to understand and interact and feel options, because as technology has evolved over the last 10 years, the power available in your fingertips in a mobile app is really strong. And I really think we've come up with a great interface in our mobile app, and soon we're going to have a web trader or a web app with the same look and feel, which we're very excited about. And our trading community is growing every day. We're getting great feedback on our products, and we want to grow it even more. But one of the things that's important as an experienced trader like myself is to admit what you don't know and what you don't understand. And I am not an expert at technical analysis. I'll tell you anything you like about an options model or an options strategy, but when it comes to technical analysis and charts, I tend to ignore them, to be honest, as a market maker, not as a trader. But as a market maker, I tend not to look at them, because as an options quant, I'm always thinking about random walk. There's no information other than what you see in the current price. But of course, in the real world, that's not true. If for the only reason, the simple reason that if everybody looks at a chart and is believing it, it's going to have a lot of power, if nothing else. There are technicals that work. There are signals in the markets. There are signals in chart patterns. So we've joined forces with one of the great minds in technical analysis and a great tool from AutoChartist. AutoChartist was developed by Ilan Azbel. Elon is our co-presenter today. On the line, the handsome guy on the other half of the screen. And Elon is going to pretty much run the show, talk about AutoChartist and talk about the AutoChartist tool, how we've integrated it into our mobile app, what is technical analysis, what things should you be looking for. We'll go through some examples, we'll take some questions. We have about 45 minutes left for this webinar. We don't have all day. So with that in mind, we're going to get things started. Both Elon and I can see your questions, so we'll definitely try to answer your questions along the way. So without further ado, I'm going to pass the baton off to Elon, and he's going to be able to share his screens. Here we go.
Okay.
And
thanks, Steven. Let me just share my screen.
Thank you.
Let me get that before I say hello. And you should see something that says AutoChartist and introduction.
We do.
Okay, great. Hi, everyone. Yes, Matthew, a question from Matthew. I hear a Safra. Yes, I'm originally from Johannesburg, South Africa. I was a trader there on the Johannesburg Stock Exchange. Now I live in a little town called Austin in the state of Texas in the USA. So it's early in the morning for me. Well, not that early, 8 a.m. Steven, thank you so much for the wonderful introduction. I wish my wife thought I was good looking, but anyway, let's move on from there. So yeah, I'm one of the founders of AutoChartist. Again, I don't come from the options side. I come from the equity trading side. Again, very comfortable fielding questions around trading techniques and, you know, especially my experience as a trader. But we'll dive right in. And, you know, I think that when you look at the trading process, it starts, you know, one can get overwhelmed with the complexity, right? You need to decide what to trade, when to trade it, how much to trade it, how to actually trade it, right? There's so many different ways of trading things these days. And so you have to go through this entire thought process before you actually push the trade button, right? The buy sell button. So you know, I think that from having a look at the platform that Steven and his team develop, I mean, it's absolutely phenomenal how easy they've made it to take options positions. Even for an options newbie like me, it's extremely simple. So I think they really did a really good job on the how much and the how, right? Especially on the options side, it's all about managing your risk and limiting your downside, or downside versus upside, right? In the different strategies you're taking. I think they've really done a good job of that. And so, this first slide is really to show you where AutoChartist kicks in, right? So how do you decide on what to trade and when to trade it, right? And so this is where AutoChartist fits into your trading process, right? How do you actually make your decision? Of course, you might not use AutoChartist. You might use your friend at the local pub. I'd like to think that we do a better job of forecasting the market than your friend at the local pub. So I'm hoping that you won't completely discount what I'm going to show you today. Also, I want you to put your guard down. Steven, you'll tell me if I'm wrong, but my understanding is that live account holders get free access to this tool, right? So we're not trying to pitch them anything. They don't have to pay anything for this tool, right? It's all free.
That's right. If you open a demo account, you'll be able to see the headlines of the tools, but you won't be able to get to see the detail. So you'll need to open up a real account in order to see the detail and execute based upon them.
Okay, great. So put your guards down, everyone. No one's trying to pitch you anything, right? Okay. So first things first. Where do you get the tool? On my screen now, you'll see a screenshot I've taken of the mobile app, and I've highlighted in a nice orange block where you'll find it. It's just after all the implied vol graphs and numbers, and just before all your margin details of each instrument, you'll get the AutoChartist information. So the first thing I want to explain is what AutoChartist is not. All right. So many of you have heard about things like technical analysis, and in the mobile app there's options to add a simple moving average. I think it was a Bollinger Band, a parabolic. You had exponential moving averages, a whole bunch of different types of indicators. And really, what these are is these technical indicators. They use, shall we call them, arithmetic calculations on the price graph to produce another graph. And I've put a whole bunch of stuff on the screen at the top over here. You can see there's a moving average and a Bollinger Band and a part of a parabolic SAR. For me, it all gets quite confusing, too many lines. But so these are all arithmetic calculations, right? Now, AutoChartist is a little different to that, okay? We don't run arithmetic calculations on price charts. What we try to do is we try to identify market psychology, right? And let me explain what that means, right? So even if you're a trader, a beginner trader, or an advanced trader for that matter, you know that markets don't just move in one direction, right? They move up, they move down, they move up, they move down. They continue to move up and down, right? And these kind of turning points of where they're hitting their peaks and their troughs, we call these overbought and oversold levels, right? You'll hear me talking about support and resistance. Support being on the base, where the kind of a line connecting the oversold areas, and resistance is a line at the top, which is lines connecting the overbought regions, right? So again, these are typically the types of market movements that are extremely difficult, if not impossible, to calculate using simple arithmetic type of calculations. We use very, very sophisticated high-end AI and nonlinear regression techniques to identify the stuff, which is primarily what your human visual cortex does normally, right? So how do you to translate this complex process that your eyes and your brains go through and make it into a computer behavior, right? So what does it mean, overbought and oversold? Let's just spend 30 seconds on this. When an instrument, and actually let me take a drawing tool. So when an instrument goes up, right, and it hits this top turning point, what is the market actually saying to you? It's turning around, and the market is saying the instrument that we're trading is too expensive. That's what it's saying, right? It's reached a point in its price where, the market's just not prepared to pay the asking price for this instrument. And so what you have is the price coming down and then turning around again, where the sellers are saying, hey, this is too cheap. right? I'm not prepared to give this asset away, right? It's way too cheap. And so the price turns around again and gets to a more expensive stage, right? And so the price of almost any asset that I know is consistently fluctuating up and down, right? Sometimes these fluctuations can be longer, sometimes can be shorter. It all depends, again, what time interval and time frame you're looking at. But there's always these ups and down movements, right? And that is what we're trying to capture as a product. So let me go into a few examples, okay? And I'm just going to kind of dive right in, right? If we look at the example on the left, let me quickly get my drawing tool again. That's this one over here on the left. You can see how the price has actually moved between these overbought and oversold levels, right? This is overbought, oversold, oversold, overbought, right? And then the price moves towards this this extension. We call this the support level, where we kind of draw this virtual line connecting the support level, and that indicates the trend at which the sellers believe the price is getting too cheap, right? As I mentioned before. Okay, and what you'll notice at the very, very end of this graph is how the price breaks through this support level. Okay, and so what this is telling us that the market psychology could be changing. Right? So the price was following this uptrend, right, with a definitive kind of oversold levels that's being identified from a market psychology perspective, and now suddenly this is no longer following that same pattern, right? It's now the price is changing. And excuse me, sometimes I'm looking at the camera, sometimes I need to look at my screen. So excuse me if I'm looking in two directions. So the price is now broken through the support level. And what technical analysis is saying to us is that we think the price is going down. The price is, we think, is going to change, right? Now, I just want to be clear about this target level, and coming back one step as to what is AutoChartist. This target level is not something that I sat at my computer one day and typed away and decided which way the wind is blowing, and that's what the target level is. The theory of technical chart patterns and these up and down movements and support and resistance, this has been around since the 1930s. It was initially called Dow theory. More recently, it was renamed to the theory of chart patterns, which is a kind of a subsection of technical analysis. But AutoChartist is not anything new in the market. In fact, it's probably one of the oldest techniques used to understand and analyze financial markets. What we've done as a product is simply automate that process, right? And so the target levels we provide are purely based on the theory of technical chart patterns. So if you open up a book and you have a chapter on chart patterns, and you follow that formula that they use to work out their target region, that's what you'll work out. Obviously, there's some error margin, but that's pretty much what you'll get in terms of the target area, right? So it's not anything that Ilan made up or Steve made up. This is a purely automation of the theory of chart patterns. Now, if we look on the right hand side, it's the same thing, right? The price has been moving up and down and up and down and up, and again, there's a breakout, right? And that's when we identify the opportunity. There's a breakout. The market psychology is changing, right? Notice how there was an initial trend before the formation of this kind of a pattern that happened, right? So it was a strong bearish trend, then some kind of consolidation where the market is unsure about what's going on, and now a bullish breakout. Now, from what we can see, this is what it kind of makes sense. We would call this a reversal, right? So it's a downward trend, a breakout on the upside, we call this a possible reversal pattern, and you'll hear me mentioning that slightly later. So these are technical chart patterns, and as you can see by these two little endpoints, these are what we call breakout chart patterns, right? And with breakout chart patterns, the most important thing about them is that we provide a target level where we think the price is going.
And just to jump in here, Ilan,
Yes,
this is all automated, as you said. So
absolutely.
you've built software that recognizes these patterns, identifies them, so that you can very quickly report them into the software, show it to the traders, and they can act on it.
Right, that's exactly right. And so once I've gone through the primer of some of the patterns that we identify, I'm actually going to, I've got a way to launch and share my mobile application with the Sentry Derivatives app on it, and I'll actually show how it's built directly into the platform, right? So so the traders don't need to go to external websites and get this information. They're getting it right inside the actual mobile application. I'll go through that. Correct. So what I'm just trying to do here is not to teach you how to identify chart patterns. We already do that. I'm just trying to explain to you what they mean. Yeah, so thanks, Steven. Thanks for that. So the next thing that I want to show you is the same idea of technical chart patterns, except there's no breakout, right? So now notice how in both of these examples, the price has not yet broken through the support or resistance levels. You can see the price moving up and down between overbought and oversold, right? Same thing, overbought, oversold. But the market hasn't changed its psychology yet, right? It's not saying to you, hey, there's a breakout. The rules of the market psychology that have been followed over the last X period are now changing. We're saying we're still trading within an acceptable range that has been exhibited over the last X candles or X days or X hours, whatever the time period happens to be of your chart, right? These are very, very interesting type of trade setups. In fact, it's probably some of my favorites. Now, I'll go back one slide if you bear with me. And if you look at this slide here with the breakout chart patterns, it's a very, shall we say, a reactive way of trading the markets, right? There's been a breakout, a change in psychology, and now there's an opportunity, right? There's going to be a change in a trend or a continuation in a previous trend. Something's going to be happening now, right? It's very reactive. And you would take it's a call to action. Make an action right now. When you think about these, what we call them emerging patterns, right? They're very, very interesting from a trading process perspective, because it gives you the ability to take almost like a preemptive strike on the market, right? So, I use the word striking correctly with options in mind, right? I don't want to confuse you. So, for example, how would Ilan, how would I potentially trade this, right? There would be a number of different ways. If there was enough of a gap over here, let's say 10, 20, 30 pips, whatever it was, I might decide to take a position right now, short, right? Or if I was unsure, I could potentially set let's say a sell stop at 1.2846. So if the price crosses the line, then that's a confirmation for me that the price is going to continue trending down, and my market maker will immediately open a position for me on the short side. But there's also a third option, right? If I'm looking at this, I don't know what this instrument is that I grabbed here. I can't recognize it. Maybe it was Euro a while back. If I think no, I think this is a good asset and it's going to continue going up, but I'm unsure of the short-term volatility, then what I could do is I could set, for example, a buy limit around this level, right? So if it hits it, expect a turnaround, right? So there's a number of different ways that these emerging patterns allow you to take advantage of upcoming market conditions, right? And so, in the past, you know, when I first started trading 20 years ago, I was quite scared of these kind of opportunities. I don't know what's going on, and I really preferred the breakout style. Now I find that these emerging patterns, the patterns are still forming, really give me a lot more room to breathe. I'm calm about my trade. I don't have to react, you know, within a split second of a breakout. I can look at it, make a rational decision about what I think the market, what's going to happen. And I think
Actually, if
that's
I
even,
may, Elon, now that you've partnered,
please.
partnered with us and you have an options tool connected
Exactly.
with your analysis,
Yeah.
the chart on the left is it's this wedge. I don't know the name of it.
Yes.
You're getting into a tighter and tighter range for the market, which generally indicates it's going to break out. Now,
Correct.
if you were further down, the chute, you might say, well, it's going to break out. We just don't know if it's going to go higher or lower,
Right.
right? And until today, until you started working with us with options, that couldn't really give you much of a trade. Well, you could put the entry limit order or the entry
Yes.
stop that says when
Right.
it breaks out, go with it. But in
Yes.
options, you have actually other opportunities, which you and I have to work on, which should say buy volatility, buy a
Right.
strangle, buy a straddle, or in
I
the chart on
straddle,
the
correct.
right,
Yeah.
if you're comfortably within a range and you see the market really has strong support and strong resistance, maybe not this chart, but let's say you
Yeah.
had a chart like
Yes.
that,
Yes.
you could do the opposite. You could sell volatility, where you could say, I'm going to sell a call and I'm going to sell a put because I'm comfortable the market's either going to stay in this range or it will return to this range over time. So you and I have some work to do to be able to take your automated chart recognition and
Right.
turn it into an options idea, not just a buy or sell idea.
Correct. And that's something that I was just, I mean, that I was actually, you took the words right out of our mouth, because with, especially if I look at the chart on the left, the chart on the right, maybe I didn't pick the best example because there's still a lot of room between support and resistance. But the chart on the left, I mean, for me, the first option strategy that comes to mind immediately is some kind of straddle, right? As you say, there is going to be a breakout. It's going to be either on the upside or it's going to be on the downside. Something big is going to happen in the next few candles, right? And we just don't know which way it goes. And taking an options position or multiple options positions, obviously, I think is an absolutely ideal way of taking advantage of the volatility that's coming up, right? Rather than
Right.
being purely directional. Okay. So let's look at some more examples of the types of trade setups that AutoChartist identifies, right? So now we're starting to get a little bit more complex, and the next slide is actually going to blow you away. But let's start with this. So this is what we call Fibonacci patterns. If many of you have heard of this this wonderful mathematician, Mr. Fibonacci, is an Italian guy. He modeled in nature how everything happens in Fibonacci sequences. I always tell my kids about how rabbits reproduce and why we should be eating rabbits instead of cows. They're more efficient. But but I can't take credit for that. I was reading a sci-fi book the other day that was talking about that. But anyway, of course, I'm kidding around. Now, the Fibonacci patterns are quite interesting because it's a view on how nature plays out in financial markets, right? And so the idea of Fibonacci patterns is that sorry, let me get my drawing object in. There we go. Is that the ratio, the line distances, let's say between A and B and C and D, are all some kind of derivative, either Fibonacci directly or a golden ratio of each other, right? 0.618 or 1.3, whatever it is. So it kind of tries to model the natural world. And what this graph on the left means, let's read it. It says to us that this movement between A and B is a Fibonacci ratio to BC, and BC is a Fibonacci ratio to CD. Now the price has turned around, and you can see that there's a bit of a delay in the recognition of this turnaround because we have to give it a few candles to confirm the actual turnaround. And now the chart is saying, or the theory of Fibonacci saying, that we expect support at one of these red Fibonacci levels. Okay, so we're expecting the price to turn around at, well, this is identified around over here. So we expected it to turn around at 0.5 or 0.618 or 0.7 or 1 or 1.272 or 1.618, right? So at one of these points, we feel that the price is going to turn around. That is what this is saying to us, right? So we don't know where it's going to turn around because any of these Fibonacci ratios could hold, right? But we do know that it could turn around at any of these points. Again, how do you take advantage of it? In the spot market, you could set multiple buy limit orders if you wanted, right? To take advantage of this. I wonder, Stephen, how you would do this in an option strategy to take advantage of kind of multiple potential turning points in the market.
That's a tough one. That's a tough one, to be honest.
It is a tough one.
I think there's going to be a turnaround. If you pick one, you could certainly, if you think one of them is going to be a turnaround, I would sell a put at one of those strikes, but I wouldn't get too aggressive. You know what you're saying basically is it's going to turn around. It may not turn around on the first support level. It might not turn around until the third, but eventually it will turn around. So you could have some comfort selling a put and earning that income.
Right, I forgot about that, right? We could actually sell a put, right? You get the income because you know a turnaround is coming, right?
That's right.
So
and that's the whole beauty of options is that you can get paid for taking that risk, right? You don't know how far it's going to bounce, but you know that there is going to be support. You're confident that there's not an unlimited loss potential here.
Right, I absolutely love that idea. In that way, you're actually making yourself independent of all of these levels, right? As long as you're willing to take some risk, even to the worst case scenario down to 1.68, at some point, you know that this thing is actually going to turn around, and so you're back in the money. Okay. I really like that. And similarly, if I look on the right-hand side, you can see this is this price had been moving bearish. Again, the A, B, B, C, C, D line, D has been erased because it's got the price here, was moving bearish. There was a turnaround. Again, we think that the next turning point is going to be at one of these levels, right? Again, so I'm guessing here you would buy a call potentially, correct, Steve?
Yeah. And remember that. Remember, you can also leave orders to buy a call. So you could say, I want to buy a call at one of these support levels to try to grab all of that leverage.
Right. You don't have to grab it at the current spot price, right? You can grab it further down. Yeah, absolutely amazing point. I mean, I think that you're right, Stephen. You and I have got a lot of work to do in trying to really focus some of the way that the trade setups work. Now, I'm hoping all of you starting to get an understanding of the kind of things that Autochartist identifies. It's all about overbought, oversold, support, resistance, right? Prices too high, prices too cheap, prices too high, prices too cheap. These are the kind of movements that we're trying to identify. Now, I put warning extreme heat on this one. This is starting to get a little bit complex, actually very complex. What we call emerging Fibonacci patterns, right? So if you notice on the previous slide, the one we just spoke about now, the price has turned around. We're waiting for a turnaround, right? So we're waiting for one more leg for the turnaround. We have something called emerging Fibonacci patterns, right? Which are a prediction of a possible 2 legs of movement. Okay, so what it means in this situation is the actual key to this entire graph is here, these purple dots. Okay, let me talk about this opportunity on the left first. What this chart is saying to us is that AB and BC are Fibonacci ratios to each other. If the price moves to the purple dot, that will create another Fibonacci ratio, right? It will result in an ABCD pattern. And then we think the price is then going to go turn around bullish, right? So we're actually creating almost a conditional turnaround, right? If it hits the purple dot, then it's going to go up, with an opportunity on the right-hand side over here, which is a very complex Gartley pattern. It's called Gartley. It's after a gentleman by the name of Gartley, as you can imagine. If the price moves towards the purple dot, then we're going to see a turnaround. Again, a two-step process, maybe a little bit too much for us to chew on during this very brief overview presentation, but I wanted, you know, in case some of you on this webinar are more advanced or experienced traders, then you know you can start looking at these things and not be too scared of them. You know, there is stuff in AutoChartist for you as well, right? For the more advanced traders, it's not only for beginner or novice or intermediate traders, right? There's some for advanced too. And again, you know, whoever said that a degree in psychology would be easy, right? All these conditional if-then movements, right? So have a look out for those. Steve, I see there's some questions coming up. Are you monitoring those? Because it's difficult for me to monitor the questions and present at the same time.
Yeah, that's okay. I'm monitoring them, and we're going to comment on them. I'll just actually chime in on that subject right now.
Please.
We have a couple of guests asking, what do I mean by buy a call, and what is a call? And somebody else asks, what is a put? So we have recorded webinars, and the next webinar that we have, which will be in about 2 weeks, we'll talk about options. What are options, and how do you use options? If you go to the playlists, and we'll contact everyone after this webinar. If you'll go to the playlist in YouTube, look under AvaOptions playlist in YouTube, or Sentry options playlist in YouTube, you'll find our webinars, recorded webinars, and you can learn more about options. Our trading platform that we're speaking of today, where we've integrated AutoChartist tools, is a trading platform that supports both the trading of FX, so to buy Eurodollar or sell Eurodollar, as well as options trading. And please keep in mind, we are not ever talking about a product that was popular a few years ago called binary options. We're talking about vanilla options, or called European options: buy a call, buy a put, the right to buy, the right to sell. Yeah. But let's move back into the platform. Yeah, go ahead.
Yeah, and I wanted to mention as well that over the last few weeks, as Steven and I were working on this webinar preparing, I was getting familiar with this platform, and I actually went through some of the tutorials, not only the videos, but Steven, I found that your educational material, the written educational material, was also really good, because it had the key the keywords and all of that. I found that extremely useful as well. So anyway, just to throw it out there, it's not only videos, also some good written material.
So I see you're showing the trading platform itself on the screen, which is the mobile app, of course. Remember, it's the mobile app is where we have the AutoChartist tools integrated. There are other trading platforms from AvaTrade, such as MT4 and MT5, but AutoChartist is only found in the AvaOptions trading platform in the mobile app, and soon our new web trader. And the same thing for Sentry derivatives.
Right. Okay. Should I continue?
Continue. I just want you to be conscious of the time, because we have about. We should wrap up in 20 minutes. So.
Yeah, perfect. Yeah. So now that we have looked at these crazy complex Fibonacci patterns, I'm not scared to put a lot of graphs on your screen for the last kind of types of chart pattern or patterns or trading patterns that we identify in the market, and these are what we call key levels. Now, I left them to last because they're actually the simplest type of trade setup, but my personal favorite. What they are is exactly what the heading says: key levels, important levels in the market. AutoChartist identifies these very important levels. You can see that this instrument, whatever it was, showed consolidation here, more consolidation at this level, and a breakout, and then a possible move here. Right now, you're starting to talk my lingo. I'm talking about breakouts, right? So support levels, too cheap, breakouts. Okay, there's going to be a new cheap level. Now, something else is going to be called too cheap, right? This price of 157.40 is no longer what the market calls too cheap. Same over here. Consolidation over here, multiple touching points, right? On this level, suddenly a breakout. We provide a target level to 0.9259. The market is saying there's going to be a new level that's now regarded as too expensive, right? These are called key levels, right? Think of them as chart patterns like we did before, except only with one line and horizontal line, okay? But we do the same thing for these emerging sections, right? So again, consolidation at the price and a movement towards that line, right? And same over here, movement towards the line. We don't know, is the price going to rebound? Is the price going to break through and continue up? We don't know. Again, a possible straddle at 1.2086 because we know something's going to happen at that level, right? So try to be non-directional, and that's the beauty of options, obviously. But again, trying to show you this additional type of trade setup that we identify, right? Both breakouts and emerging patterns. Anyway, so that's the easiest one. I'm just going to kind of flip over. So for completeness, I wanted to show you all the different patterns, and don't worry about the names. I actually specifically fuzzied out the names because the names of these things don't actually matter. You know, yes, you know, if you want to talk to me and sound all being like you're a professor of technical chart patterns, that's fine. You can learn the names, but in truth, there's one fundamental thing that you have to remember, which is the price is too expensive and the price is too cheap, and that's called support resistance. They can form downward moving or upward moving patterns or left and right and consolidation things. The bottom line is that you're trying to model psychology, right? Market psychology. Okay. Something that you'll find interesting and I just want to touch on quickly, that is that not all trade setups are created equal, right? Just like you look at a picture, let's say a painting by a master, right? A master painter, and you look at this Picasso and you think, wow, that is just magnificent, right? You can tell that there's something beautiful about the Picasso. No, believe me, I'm not looking at a Picasso. I wish I was, but you look at the Picasso and you think, wow, that is a serious work of art. And then you look at something that I drew or my 10-year-old kid drew, and you think, wow, that's a piece of crap. Right? So your visual cortex, your brain knows what's good looking, what's bad looking, right? So it's the same thing with trade setups, right? How do we measure the visual quality of a pattern, right? How do we describe beauty? And we do that using a few different metrics, right? So the first metric that we use is clarity. So how much noise is there between support and resistance? Can you see this little icon, this thumbnail on the left? Lots of noise happening between support and resistance. This one on the right, no noise. This is very clear, right? More clarity is better. The strength of the initial trend. Was there an initial trend and then a formation? Or did this thing just start from random market noise and then suddenly this pattern formed, right? So obviously, the stronger the initial trend, then there was a trend, a very definitive consolidation in the market, and then the next breakout or breakdown happened. Again, the stronger the initial trend, the better. The breakout itself is very important, right? So if you think about what does it mean, market psychology, right? It means a definitive move. A change in market psychology means a definitive move in a certain direction. If your price, you know, just touches the support resistance line and there's a little bit of movement around that line, are we really saying that the market psychology has changed, or are we saying the market is unsure, right? If there is a nice, strong, definitive breakout through the support or resistance level, then what we're saying is the market is very sure this is going to be a change in the market psychology, right? We're going to be very, very sure that this is now something new that's going to be happening. And lastly, which is what we call uniformity, is how equidistant or proportionally distant are the turning points, right? How beautifully formed is this pattern from a uniformity perspective, right? Over time, how beautifully formed is it over time? And all of these things, they contribute to the beauty or the ugliness of a certain trade setup, right? So you'll see that when I show you briefly go into the actual platform itself, we'll see some of that. Before I mentioned the continuation reversal, and I'm not going to go into that again. We're looking at a reversal of the chart or a continuation of the chart, right? So it's the same thing over here. I mentioned it slightly earlier. I'm not going to go into that. Not going to go into that again. Okay, the $1 million question. I've spoken for 40 minutes. I've given you all this mumbo jumbo. How much money, Ilan, how much money am I going to make? That's what you all want to know.
How good are you? Put your money where your mouth is. Let's go.
I know. It's the ultimate $1 million question. Okay, so it's an interesting thing. It's an interesting thing about trying to figure out the performance. We are not allowed, due to regulatory reasons, and Steven, you cannot say to a trader, buy, sell, this is how much money you're going to make. This is not something that's allowed. And I think it's absolutely correct, because I think no one can tell you what's going to happen in the future, right? There's always that same disclaimer I keep telling people: past performance is not indicative of future performance, or may not be indicative of future performance. This is very, very important to remember. And it's not only for Autochartists, it's for any financial advisor trying to sell you a financial product, right? Always remember that. Past performance may not be indicative of future performance. The thing is, though, what we do measure at Autochartists is not how much money you would have made following our signals, but rather how often do we hit our target, our forecast price, right? Let me flip a few steps back, and let's look at this key level situation. In the situation where we provide a target level, how often do we hit our target level, right? So it's independent of stop loss strategy, options strategy, any kind of thing like that. It's purely, yes, it hit the level, or no, it moved away from the level. That's all we're measuring, right? So you can choose whatever option strategy you want to trade it, or whatever a stop loss strategy on the spot market you want to trade. We're independent of that. All we're looking is true or false. Did it hit or didn't it hit, right? So let me switch to, so I've broken down the stats by 3 categories: by pattern, by symbol, and by hour of day. This is at GMT 0. And these are really, really interesting statistics. So these are stats over the last 6 months. So over the last 6 months, we identified 939 ascending triangles, of which 655 hit their target price, right? Which is 70%.
Within the time frame that you provided as well, within the charts time frame?
Right. Thank you, Steve. I completely missed that out. We allow 1 chart pattern length. So if the pattern was, let's say, like this, and it had a length of 30 candles, then we allow it 30 candles to hit its target price, which could be up here. Okay. Right?
That's exactly 1 hour candle, then it's 30 hours.
Exactly. So now what I can tell you is that this is what we do vanilla. I can tell you that 65 to 70% of our charts hit their price within the first 30% of the chart, which is the first section. Great. I always tell people, if it's going in the wrong direction, admit to yourself you've made the wrong call. Don't hold on to a losing position. Okay. You're holding on to margin. You could be using on other trading opportunities. Never hold a losing position. Just deal with it, swallow your pride. I made a mistake and move on with your life, right? I don't know, Steve, if you promote the same thing, but
you've got to, if you're a good trader, you have to recognize when you're wrong. As simple as that.
Absolutely, and it's the downfall of a lot of traders that just can't take the hit. The idea in trading, certainly for me, is I don't care how much money I win or lose in a trade, as long as I win 6 and lose 4 out of 10. That's what I want to do.
So we can see that Head and Shoulders is a great, reliable. It looks like it's a reliable pattern, for example.
Absolutely. In fact, across all markets, I can tell you that we run these stats across all different markets. Head and Shoulders and inverse Head and Shoulders are star performers across all markets. And I will give you an additional hint.
We rarely see them, though. I rarely see them in your yeah.
look at this. Only 81 and 73 over the last 6 months, right? So they do rarely happen. Okay. But if you see one, you gotta take note. You gotta set up and take note. Now, something
and
that
you identify pennant all the time, but it's. Go ahead.
Yeah, it is what it is. I'm not trying to lie to you. If I see a pennant, I don't. I ignore it.
So we don't have a lot of time left. Basically, on the left, you've got the patterns. In the middle, you have the Forex pairs. I'm surprised you don't have gold listed. We get a lot of gold trading these days.
Right. And I was just thinking that today, I wanted to put gold in, and I didn't have the stats for your gold. I had stats for other gold, and they were at about 64%, but I didn't have your gold, so I didn't want to lie to people, or mislead them. But from other exchanges, I've seen around 64-65% on gold.
Okay.
And so we
have
our
gold is spot gold. Our gold is a spot cash gold.
So that's spot. Oh, okay. So that's it. So it's not the futures market. So then, yes, it's around 64-65%. That's
okay,
what
great.
It is.
And then time of day, it looks like the London day is more reliable than the New York day.
Absolutely, and that's because of market psychology. There's more liquidity, more volatility, and that's when markets play out, right? With liquidity and it makes sense. If there's no participants, you don't get market psychology playing out, right? So the London time zone is where it's all at. That is absolutely correct. Okay, let me quickly go into the platform, and let me share my screen. Okay, let me know when you can see the platform.
We see it.
Okay, cool. So as I said, you can find Autochartist if you scroll to the right-hand side just after your implied vol numbers. You have the Autochartist patterns, and you'll see that you have a line of Autochartist for every instrument, right? So for example, the latest pattern that we see on Euro USD is a rising wedge. If we actually click on that rising wedge, here it is, it's a rising wedge. But you will see that there's 2 little dots above the trade button. It shows us there's actually 2 trade setups right now on Euro USD, right? There's this one, and if we scroll to the right, we see another one. In fact, they are very similar in nature, just slightly different. In fact, I would call them the same thing. The computer just thought there were slightly different lengths, so it identified them differently, but the same pattern. Is this something you would trade? I love trading with a trend. So this would get a thumbs up from me. Yes, it hasn't completed, it hasn't broken out the support resistance level, but the trend is up, the turnaround in the upward direction, potentially something very, very nice to trade.
And let me just add, you can see next to Eurodollar that it's based on a 1-hour candle.
Right.
Okay, so it's all charts are based off a specific candle. So this is based off the 1-hour candle. It's bullish. The name of the pattern is a rising wedge. And yes, go ahead and scroll.
Right, and then if you scroll down lower, remember all those beauty characteristics that I had, right? So here you have an idea of how uniform is it? How clear is it? Is there a breakout? There's no breakout, of course. And remember what I said, there's no forecast, because there's no forecast on emerging patterns because it's a moving target, right? So you have to derive what you believe to be the forecast yourself. But certainly there's a lot more information, and Steven has done an amazing thing and actually added information about this chart pattern itself at the bottom, right? The characteristics, when it forms, what it suggests, right? Really, really useful information. Certainly, if you become more familiar with chart patterns and you watch these things, you wouldn't even have to scroll down. But I don't even scroll down. I can see immediately what those things are just with my mind's eye. Very important here. You will notice that there is a stop loss, right? The suggestion. Okay, so if you click the trade button,
it takes you into the trading platform, right into the trading screen. Now,
exactly.
what's happened here is the market's moving around, so that stop loss actually has now become a take profit because the market has moved through that level. So actually, this pattern was wrong. You can see actually that today we've broken through that support level.
Right. It was going up. It was going up, and now it actually broke through that level, right? So potentially, actually, a buy opportunity. Actually, if you think about it, right?
Potentially, but basically, what it's showing is that we've already hit that stop loss level, and that pattern should no longer be here.
Right. Let's look at cable. This is an interesting one. Let's see what's going on in the market. So we've got two of them. So one. Okay, very, very interesting. Notice how the first chart pattern I'm looking at is a 4-hour candle with a bullish signal. The next one is a 1-hour candle with a bullish signal, right?
We've got like 3 minutes before we get kicked out of this webinar. Just be aware, okay? If we lose everybody, I apologize. The webinar will be recorded, and we'll have another one very soon.
Notice that there's a take profit and a stop loss on this one. So if you push the trade button on here, the platform will automatically pre-fill a stop loss and a take profit for you, which is absolutely incredible. Talk about one-click trading.
And just to quickly show you what the screen is telling you, if you scroll up just a little bit so we can see it, there you go, and you can zoom in a little bit as well. Just slide your finger up on the left. On the y-axis, you can make it a little bit bigger. Slide your finger up, there you go. Okay, so it's showing us that we're going to go long the market. We're going to buy at the current market level. We've got a take profit above. You see the green line? It tells you where the take profit level is on the right side, 129.78. If you traded 100,000 and we hit that level, it tells you in that white tag exactly how much money you're going to make. And the stop loss also is quantified. It tells you exactly how much money you would lose if you hit the stop loss level. It's very visual. Once you hit the stop loss and take profit, you're out.
This is phenomenal because most people show it to you in pips, which makes absolutely no sense.
Right. You can see it, and when you tap there, that's right. You can see it in dollars. You can see it in your account currency, however you want to see it. But it's all right there on the screen for you to see.
Yes.
And then you click buy, execute, and you're done.
You're in, and you execute. Boom, we're in the market.
And you can share that trade with your friends by clicking that sharing icon. The sharing icon will open up your Android or iPhone sharing menus to then send a link with this exact trade to your friends or your followers. If you just close that, down next to the cable, next to where it says pound against the dollar on the bottom left, go back to the trading screen.
Oh, sorry.
We also have another AutoChartist link next to where it says pound against the dollar. You have that AutoChartist logo and a 2 in a circle. That yellow 2 at the bottom left, if you touch it, is just telling you we have two signals, and you can always access them. And here they are. You can get a list of them and choose which one has the clarity or quality that you're looking for. If you click where it says cable, a pound against the dollar right at the top center, now you can choose any symbol and switch to a different one. Again, only available to real accounts. So now you're looking at dollar CAD, and you're seeing there were 2 breakout signals. They were identified a few days ago, actually, on the 9th of September, yet apparently they're still valid, or we wouldn't be showing them here. So again, just to be aware, we might lose.
Definitely still valid, right? Definitely still valid.
And one last thing to show you, the chart that Ilan's team has created, in green and red, you have where was the market up until the point that the chart pattern was identified. And then in white to the right is what's happened since the pattern was identified. So you'll see if it's working, if it's not working, you know how new or how current this signal is as well.
Right. You've done a phenomenal job. Phenomenal. Thank you so much for the opportunity. Sorry that I took so long.
No, it's great. I think we're going to have to wrap up. We'll just move to some questions because we're going to get knocked out in a moment. So thank you everyone for joining, and do install the platform, open a real account so you can make use of these tools. And Ilan and I are going to work together on specific applications to options trading as well in the near future. We have this one last question. Is it a good idea to not use the stop loss? Well, the stop loss is there to prevent losses. It's a good idea to use stop losses. It's really up to you and your risk tolerance and how much confidence you have. But if the chart pattern is recommending it, these chart patterns are suggestions. They're guides. They're psychology. They're telling you what's going on in the market. Of course, it's up to each individual trader to decide whether to use stop losses and how much to use, how much to trade, etc. But stop losses are a good idea.
Or don't use a stop loss. Use an option to hedge your position, right?
Right. A question here: does the app require a manual? The answer is no. We've got great guides to the app in YouTube. Go to the YouTube channel of AvaTrade. Look for AvaOptions, and you can see it. Sorry, it's right in the app. In the app, you click that yellow, click the logo in the top left of the app, Ilan. The menus are right there. There's videos. Just scroll up a little bit. Videos. Click videos. The videos are available right here in the app. You don't even have to go to YouTube. They're in the app itself.
Video.
Yeah.
They're amazing videos.
You can use them right here anytime. You don't have to go anywhere. Stay in the app. Okay. And I really, the whole goal of the app was to make options trading understandable and easy. And I think we've done a really good job with that. I think that the chart patterns and pictures and it all works well together. Here's a menu that Elon's showing you of option strategies. There's a guide. So if you click strangle, it says what is a strangle, what is a put option. It's really easy to use. You want to see what is a put option, click try it, and it will put you right into the trading platform showing you what buying a put looks like. And you've got all kinds of great tools. So definitely watch the videos. And I'm going to end the presentation now because we are going to get kicked out. So I'd rather be in control. Thank you everyone for joining. Great job. Thank you, Elon. Great product, great tools. We look forward to doing lots more together.
Thank you, Steven. Thanks for the opportunity. Thanks, everyone. Nice to see you all. Bye.
Thanks, everyone. Bye-bye.